Hi guys, hello. Welcome to the Make Money with Investing Boot Camp. Big up yourself. I am very excited that you all are here because you could be doing anything on your fine Saturday afternoon. You could be, frolicking around town, but you have decided that learning to make more money is very important to you, and so you are here. Thank you so much for joining in. You guys know me. I am Keisha the teacher. I'm very excited to have you here. Keisha Bailey. Sagicor is also in the house. So big up to Sagicor. Thanks to Sagicor for partnering with us to ensure that we're able to implement on the knowledge that I'm going to be importing into you today. So let me know where you guys are repping from today. You know the usual. Make sure you have your money book ready. Make sure you are ready to take notes. I have a special money book just for today. Make sure, let me know you have your money book ready, your pen ready, and you are ready to learn. Let me know where you guys are representing from. Hi, Angie. Hi, Raquel. Hi, Simone. Hi, Nick. Raquel from Kingston. Big up yourself, Raquel. Welcome. We have also Natasha from Hanover. Wow, nice, Natasha. Big up yourself. Saint Anne from Angie. Raquel is saying she have our money book up. Yes, we are ready to learn. We are ready to learn about how to make more money with investing. Mandeville Merlin, yes, big up yourself. And Simone from the Bahamas. Nice, Simone. Welcome. Excited to have you here. Whitney from Kingston. Nice. So let's run through the protocol for today. We are at day 1 of the Make Money with Investing boot camp. Today, we're going to start with the investing basics. What I ask that you do, this is a private stream for everyone who has registered for the boot camp only. So when you come in, the way to get your questions asked and answered is through the chat. So ask your questions there. I'm going to be making a note of them. Once Sagicor is on as well, put your questions in. They are here and very excited to answer all your questions and to help you to make sure the implementation is possible. So ask as many questions as you want. That's why we're here. Make sure you leave fully understanding everything you need to do to start investing. Don't let me say anything that you don't understand and let me move on. Stop me. Ask me to go over it. I will stop. I will go over it because my aim is to ensure that you learn. So if it's not clear, say, Keisha, can you repeat that one more time? Ask your questions in the chat. Can I get a yes that we are on board? Everybody ready to ask questions? I need to say yes. Give me a money up if you fully understand all of the different admin matters and you are ready to go. Let me know. Drop it in the chat, please. So we'll go. Everybody understands exactly what we're doing. Everybody is ready to learn. Yes, we are on board. Perfect. You all have access to your portal as well. The recording from each day is going to be stored inside there. So you can watch it as many times as they need to. You can make notes, go over, cement, and of course, implement. You will also have the ability to contact Sagicor directly so that we'll make sure the implementation happens. Welcome, Raquel from Miami and Christine from Coconut Creek, Florida. Big up yourself. Big up. All right. So we are going to jump in to our slides, right? Day one, we're covering the investing basics today. Get ready as I go. Stop me. Investing basics. So we're doing everything up to the type of accounts you will need. And then Sagicor is going to come on to discuss the account opening process and share their additional services and products as well that will help you. So let us get into it. So today we are covering money mindset, budgeting, the stock market and investing. I'm going to explain that. And then the types of accounts you need to have. And then we're going to end today with how to open the different investing accounts. Now, the approach to investing that I teach you is comprehensive. I am teaching you the tried, tested, and proven way to build wealth and build wealth that will last. We're not looking to make overnight money and then the next day we are broke. We're looking to build wealth that will last for generations. We're looking to build wealth that we can pass on to future generations. And so there is a blueprint to do that. There's a specific strategy to build wealth that lasts. And that's what I'm going to teach you. It is much more than investing. Investing is one component, and investing is the component that opens up the growth of the money. But we can't be investing if the other pillars in our system are not there. So what I will teach you to do is very comprehensive. We're going to make sure that your entire money system and your entire money life is right, such that you can invest and grow your money. That's what we are doing. So it's very comprehensive. We're fixing up your entire money life, not just one aspect, which is investing, but every single aspect. And it starts with your mind. So we're going to go into that. For those who are new to me, let me introduce myself. My name is Keisha the Teacher. That's what you guys call me in these internet streets out there. But essentially, I am an investment educator. I am from Jamaica. I live in Toronto now, but from Jamaica. I am what you call a money maven. I know money and I understand money very well. And my superpower is getting you to understand money too. I'm able to explain and teach you about money in a very relatable way, and I push you to implement. Now, I have over 17 years of experience in the global financial markets. I've invested all over the world. I have all of the designations and affiliations and all of that. I am well trained. So I know what I'm teaching you because I've done it. I've lived through it. I've managed over 100 billion with a B Canadian dollars. And my passion is showing persons how to create wealth. I believe that everybody can be wealthy. Everybody can be wealthy. You just don't know what to do. And so as much as I can teach you what to do, that is my passion and that is my purpose. Now, why you need to listen to me? As I said, I know the thing. I know it very well. I have managed money across all of these different companies for high net worth clients, for pension funds. I've managed mutual funds. So when you invest in unit trust, the money would come to me as a portfolio manager to grow that money. So my skill set is I can grow money very well. I can grow it in my sleep. But it comes natural to me now after doing it for so long. And so I want to teach you how to do the same thing. But of course, it's going to be a journey. It's going to be a journey. I'm teaching you and you're going to implement and implement and implement. And over time, you're going to get very good at doing it as well. Now, we're starting off today with my favorite affirmation. Money flows to me effortlessly. I want to just set the space. that money flows to us effortlessly, drop it in the chat so I know you are saying it to yourself as well. Money flows to me effortlessly. Money flows. It just flows and it just flows and it just flows. Please drop it in the chat. Write it in your money book. That's the first thing. And I want you to live by this affirmation as well. Money flows to me effortlessly. Keyword, effortlessly. I don't need to kill up myself and huckle up myself and do 50 different overtime and work part-time, whichever time, to have money. It flows to me effortlessly. Thank you. Money flows to me effortlessly. Perfect. I want you to understand that. And we are going to live by that. That is one of the big money mantras of Profit Jumpstarter. Money just flows to us. We just wake up and it's just money and it's just money and it's just money. As few persons are here from my money squad, you guys know money flows to us. That is what we do. It just flows and it flows and it flows. That's what I want you to focus on. So we're starting out with mindset, as I said. Money flows to me. Elbow cough, elbow cough. It flows to you. It flows. We're just making money flow. Now, we're starting out. What does an abundant lifestyle look like for you? Write that down in your money book. We're starting there. What do you want out of life when it comes to your money? What are we working to achieve? If we do not have a goal for our money, we're just kind of running around. In Jamaica, they'd say run around like no head foul. We don't want to do that. We have to have a purpose, an overall goal for our money. So think, what does an abundant lifestyle look like for you? And write it down in your money book. Now, I love these answers coming in. Family trips, more time with kids. I love that. Yes, that's what we're here to do. For me, abundant lifestyle means that I am in control of my time. I am in control of my time. I don't have to be running from job to this after clocking at 9 after. I don't want to be living like that. And so abundant lifestyle for me is I am in control of my time. I have the freedom to do what I want. I can spend time with my family. I can sit down with my son. I can teach him. I can teach him about money because I own and I control my time. That is beautiful. So, are you guys guilty of any of these things? You don't know where your money go each month. Don't have a financial plan. You don't know the right moves to make with your money. And you have no idea what the right investments are for you. How many of these are we guilty of? Let me know. Drop it in the chat. How many of these are we guilty of? Because we have to cultivate the right money habits. How many of these that are here are you guilty of? 3 and 4. All right. We don't know the right moves to make. A lot of people, we don't know the right moves. Stay in the right place because I'm going to show you the moves. You are. All right. Some people saying all of the moves. Gotcha. All right. So we're going to take control today. We're taking back the reins. We're making sure that our money flows to us effortlessly. That's what we're doing. So why it matters is that the mindset we have uncover the money blocks that are there. We have to know our money intimately in order to grow it. I have to know my money in order to grow my money. Inside the portal, you all have a money journal in there and you have a money planner. I encourage you, use them. Use them. We're taking control of our money situation. Use the journal, use the planner. We are creating positive money habits. I want you to start documenting your money. I want you to write down the goals you have for your money. I want you to write down how you spend your money. We have to get very intimate with our money because if we don't know the money, it won't grow. We can't look at our money once a month or once every 3 months. And when our credit card bill comes, we hide it under a mattress or we throw it away really, really quick because we don't want to look at it. Those are not the right money habits. They are not. And you will stop doing those as of today. Confront your financial situation because we're going to fix it. But if you don't know your financial situation, we can't fix it. I can't teach you what to do because you don't know what situation you are in. So I encourage you, confront your money situation. Confront it, and let us know our money so we can grow our money. If we do not, money will control our life. Money is gonna run our head. We're just gonna be running around with no clear purpose. We're living paycheck to paycheck. We're always in a rat race. We do not want that. We don't want that. We want to take control. It's our life or money. We are taking control. So, couple of things we're shifting, and I'm doing this earlier out in the boot camp. We're shifting. So instead of wasting time having one income stream, pay others, you give everybody money, and then you're broke. You're looking on income, struggling. We need to switch and come over here where we are learning to invest. We have multiple income streams. You guys know I am a big fan of multiple income streams. Not multiple income stream where you have 5 full-time jobs. No, multiple income streams where we create businesses and we create passive income streams. On the Profit Jumpstarter website, I have a guide. I've given you all a lot of examples of additional side hustles you can do. I want you go on the profitjumpstarter.com website. Look under the free guide section. There are tons of guides there that can help you to create income streams. It will give you a lot of ideas and you can go and implement it. I have guides that talk to you about real estate investing. We have guides about the future of money. Go on, explore them. But we need multiple income streams. If any other year, 2022 is the year. 2023 will be the year. 2024 will be the year. We need multiple income streams, right? And we're taking control of our money. Now, we're also going to shift our habits. For those of us who are guilty of stunting on the gram, you take a nice picture and then you roll over and go back to real life, which is nothing like your Instagram life. We need to stop doing that. What I want you to start focusing on is knowing your money, living within your means, and learning how to invest. That way, your fake life can become your real life. So let's channel the energy away from hyping up the fake life, living off of credit cards, jumping on the latest get-rich-quick scheme. We don't want to be doing that. We want to be over on the real rich. Real rich people are quiet. You don't see them all over Instagram posting because they're busy. What they're busy doing? Investing, understanding money, learning how to grow money. That's what they're busy doing. They're not busy posting 5, 6, 7 times about, hey, weekend, hey, real life. They're not doing that. And I want us to shift into wealthy habits, right? I am pushing you guys to become students of finance, students of investing, students of understanding money and how to put money to work for you the right way. We don't need to live any fake life because our real life can be way better than the fake life if you learn how to invest the right way. If you learn how to take control of your money, your real life can be better than the fake life that you're trying to put out there. So we need to focus on that. Now, we are going to change our money habits. So next thing to write in our money book, next thing to write, yes, Natty B, next thing to write in our money book, what are the 3 things that you plan as of today to change in your money habits? What are the 3 things? Drop them in the chat, write them in the money book. Which 3 things are we changing with our money? What are we going to be doing better with? Because my aim is to get you to do better with your money. Do better. It can't be the same old from year to year. I want to show you how to do better. So what 3 things? And I put 3 because it's not gonna be just one little thing that you change. We're changing three things. All right, knowing how you spend. Yes, the money tracker is there inside the portal to help you with learning about how you spend your money, keeping track of where the money is going. We have a money planner where you write down your monthly spending plan. Use them. They're there for you. Use them. They work. That is why I put them in there. Nothing inside that portal is in there by Bootcamp. Everything has been carefully curated to make sure that you can build wealth. All right, stick to my budget, allocate investment funds. I love that. Build more streams of income, budgeting, sticking to my budget. Good. Good. I need to see some more. We have a lot of persons on today. Where are the changes? We need to see them. We're going through the change together. We all got each other. Drop the changes in the chat. Let's go through them together. I can even tell you the 3 habits I have personally changed over the years. One is I know my money to the last cent religiously every day. I check in on my portfolio. I check my accounts. I check my income. I check it as my eyes open. Next thing I do, number 2 for me, is putting myself in a network of people who are living a similar lifestyle. I am surrounded by other investors, whether my Money Squad investors or other investors that I know. I am constantly surrounded by investors. So I live and breathe investing. And the 3rd thing for me is I educate myself. I am constantly learning. You guys see the bag of degrees and whatever I have. I always push myself to learn. And as I learn, I say, I need to learn some more because the world is constantly changing and we're going through a period of change right now as well. I am always learning. I like to say I'm a student of life. Always I read some book somewhere, always trying to learn something new. So I like that the habits are coming in. I'm taking accountability for where my money goes. Perfect. I'm clearing the credit card before the due date and put money on the credit card before spending. All right. Read more money books. Reading maketh a full man. Yes, we need to read. We need to read. All right. So we're pressing along. Next thing, remember I spoke about network. You need a circle of friends who talk money, who are on a similar journey as you. Examine your circle. Examine your circle. Examine your circle. If your circle is not lifting you up, we need to change it. If the circle of friends you have is not empowering you to be a better person, holistically, we need to change that circle. Think about it. If your circle not working, we need to change it up. We need to change it up. The circle has to empower and uplift you. All right, so I'm at my next affirmation because we're going into now more deeper stuff. We do mindset, we do habits, we're coming down now into action stuff. So drop it with me in the chat, say it with me. I control money. Money doesn't control me. So when you see the money, look here. I control money. Money does not control me. Say it with me in the chat. I control money. Money doesn't control me. I control money. Money doesn't control me. We're saying it, we are living it. Let's go. I control money. Money doesn't control me. All right. Money not going to rule my life. I'm not going to be a slave to money. Enough is enough. Again, you have all the tools inside the portal to be very wealthy. It is there. The resources are there. Books are in there. The planners are in there. The net worth tracker, the budgeting. Use them. Use them. Use them. Don't just look at them and say, oh, yeah, thanks, Keisha. Use them. Print them off, write in them. We have to become a student of finance, a student of life. We need to do that. I control money. Money doesn't control me. Nice. All right. So key thing we're going to start looking at now is where's our money going? We need to be able to account for how our money is spent. We may be paid once a month, or maybe we're paid twice a month. Maybe we're running our own business. Some money comes in every day. Regardless, we need to account for where that money goes. What I don't want is, oh, I get paid and, as I quit, the money finish. That is money controlling you. We need to be able to account for money. And this is where the money planner is extremely useful. I use it and I write down and I know, I track it. We have to know where our money is going. So we're going to look at how to create a spending plan and to budget with abundance. My way of budgeting is that I do not believe in scarcity. You guys see me? I look very nice. I look very nice. I take care of myself. I do not live in scarcity. I do not suffer. I do not want for anything. But what I do is that I budget with abundance. I'm not out here spending off money and can't account for it. I know where every cent goes, but I budget with abundance. And I'm going to teach you guys how to do that as well. So budget is important because when we control the money, we can grow it. When we know how to control our money, we can grow it. If not, as I said, money is going to rule you and it's going to become harder and harder to make ends meet. So the money planner, look for it in the portal. The goals are there. Track your goals. Know your goals. Track your goals. Make sure. Then we also have an expense tracker. Track the expenses. Track it. Yes. So I'm Andre queuing me up. He knows what I'm going to teach. This is I live and die by the starter spending plan. My 50, 30, 20. I live by it. I live. It works. It works. It works. It absolutely works. Every single dollar that comes in, 50 cents of that dollar should be spent on your needs. These are your bills. These are your, I need to pay this or else. Anything that you say, I need to pay this or else, then that is a need. So your mortgage, rent, car, gas, food, these are needs. Your grocery, not dining out, not living your best life. That's not a need. We don't need to eat out every day. We don't need to. We want to. We don't need to. So 50% of every dollar goes to your needs. 30% goes to your wants. These are the I feel like. These are your nails, your hair, your gym. That's 30%. And then 20% is now for saving and investing. This has to happen. How I ensure that I do save and invest is I do this first. So as the dollar come in, I cream off 20 cents right away to go to investing. Because if I don't do that, I am going to get ahead of myself. And I'm not going to do it because these are going to take over, especially the wants. The wants are sneaky. The wants are super sneaky. They're very conniving, these wants, because the wants are driven by emotions. The wants are, boy, I feel like, I feel like I could have go eat a 3-piece. I feel like, I could have gone for dinner tonight. That's these wants here. So to enforce discipline, because we know ourselves, let's just be real. We know ourselves. We know 20% has to go first. Let's do this first. And you may say, well, Keisha, I have credit card debt, and Keisha, you don't understand, it's so hard. Do this first. Do this first. This is how you build wealth. You are here to build wealth. You came in the boot camp to say, Keisha, show me how to build wealth. I am telling you what to do. Follow, and you can build wealth. You cannot build wealth if you're not saving or investing. It's not gonna happen. Just forget it. There's no way that we can be doing needs and wants and expect to be wealthy. Just forget it. Just give up, move on. If you are looking to build wealth, the 20% has to come first. This is also how you prioritize yourself. This is how you say self-care, me, I come first. You have to save and invest. You have to save and invest. It has to come first. And so we're taking action. Again, what are some ways you can bring in more income? My side hustle guide is there on profitjumpstarter.com on the free guide section. Check it out. Go and look for the guide. Implement. Expenses, some of the wants. What wants can I not do every month? What are some of the wants that I don't need to do every month? Let's look at that. We need to write that down in our money notebook, our money book, and implement. All right, coming on now to debt. Moving along. We're getting rid of all bad debt in our life. The bad debt, we just say later for you. Bad debt, we don't want it in our life. And you notice I say bad debt. I didn't say all debt. I didn't say all, like, debt free since 93. No, we don't do that. There's good and bad debt. I love good debt. I have tons of good debt because the good debt is making me wealthier. I don't have any bad debt because bad debt is just a sinking ship. We're not doing any bad debt. So we're going to go through the difference between each. But I am committed to eliminating all bad debt from my life. Bad debt, later for you. Bad debt, we don't want none of you. You need to go. That's what we are focusing on. So now, bad debt. Big example is credit card. How many of us here are guilty of not clearing the credit card each month and maintaining a balance on that credit card? You don't have to just give me a one or just a little wink or something. How many of us do not clear the credit card each month? Or maybe we'll clear it some months, but we don't clear it some months. How many of us here? Let me know. Is it that, some months, Keisha, I'm good, some months not? Because I'm pushing you to get every single month. Anybody tied to Profit Jumpstarter is a bad debt-free person. We don't deal with bad debt. Every single person in my community will not have any bad debt. All right, so you don't clear it every month. Not to be, we're going to change that. We're going to change that. We're changing that. I will show you what to do, and we're going to clear it. All right, so we have a few people guilty. That is good. This is a safe space, as they say. I need to know so I can show you what to do. If everybody here says, Keisha, I don't have any bad debt, I will just skip this part and move on. No, so good question. I have a question from Simone. If I clear the bad debt and spend it back, is that bad? No. What is key is that you need to clear it each month. We need to clear it each month. Clear the balance. So if we spend it, even if we max it out, as long as you pay it. Credit cards are very good if we pay them off by the due date. The aim is not to carry a balance, especially when we see interest rates going higher. The fees on the credit card will go higher. Proper money management dictates you cannot leave a balance. You cannot leave a balance. The blueprint I'm teaching you say no balance. Use it. That is fine. Use it as much as you want, but make sure you pay it back. So what that means then is you need to be disciplined. Don't spend what you don't have. Use the card and use it. There are a lot of great credit cards out there that give you a lot of bonuses. I use mine. I use it, and I get all of the benefits because I love those benefits. I love it. But what I do is I pay it off. I pay it each month. Yes, you get airline miles, you get cash back. Some of them have travel, they pay for airfare, hotel, rental cars. It is beautiful. So I use it to get the rewards. I love the perks. As I said, abundance, abundance, right? All throughout the pandemic, when I traveled off of my airline points. I never spent $1. And it was a good traveling. I had the points. I use the credit card for the points. So I will always have a lot of points and then I just save them up for a nice exotic trip. But I'm not running up any balances. I do not do that because that is not prudent money management. And that's not what we are about. So let's look at how to get rid of bad debt. For some that say, well, Keisha, I'm a little guilty. Let's talk about how you're going to get rid of it. So take notes. We need to get rid of it. I told you the fees, the penalties can be exorbitant. So we're not looking to go down into that rabbit hole. We're looking to use the card to get the benefits and not use the card to make ends meet. If you find that you're living off of your credit card, you have a problem. Admit that problem to yourself and let's fix it. We shouldn't be living off of any credit card. We should be living in abundance. We use the card for the benefits and we pay it off. All right, we don't want debt to drag us, and compound interest on credit cards is one of it just drowns you. I have been there. I know. When I just started working, when I just left university and I started working, I said, whoo, I am working. I'm a working class. I had this weird thing where I used to say every year I'm just changing my wardrobe. I just throw away all of the clothes every year. And I say I'm a hot girl and I have to have a new wardrobe every year. I don't know what was in my head. That was not a smart move to make. And so I was racking up these credit card bills like nobody's business. Racking up because I was out there. Oh my God, I can't repeat clothes. I can't repeat. I'm a hot girl. No, I had to stop myself and say, look here. Check yourself before you wreck yourself. And then I was able to pay down the debt using this method that I'm going to show you now, right? So we need to, again, know our money. So write down the bank you have the credit card with, the interest rate, the balance, and the minimum payment. We need these 4 numbers. So write them down. Okay, I have a Bank of America, or I have a NCB or a Sagicor, Scotia, First Global, Wells Fargo, TD. I have a lot of list the bank, or it may be credit union. Whatever the institution is, list it, put the cost, put the balance, put the minimum payment. List them. We need the list. We have to know. Then fill a nice little table like this, and you're going through that way, right? Fill it out. Then we're gonna go 2 ways. 2 ways. This is it. It's not hard. It's totally doable. 2 ways. First way, go from the smallest balance to the largest balance. That way, you kind of incentivize yourself. You do the card that have the smallest outstanding balance, pay that off first, and then work your way up to the largest one. Or we'll go with the cost. So we say, all right, the one that have the highest interest rate, pay that first, work my way down. But it comes from doing the list first. You can't implement any strategy if you don't know what the interest rates are on the card. We need to know the interest rate. We need to know the fees. We need to know the balance, because we can't organize the debt if we don't know the balances. So pick whichever way. Both of them work. It's your personal preference. They work, right? Start with the smallest balance, work your way up. You have to, however, stop using the cards. What that means, then we're going to have to cut back for a little bit. We have to cut back until we get these cards under control. I'm not saying cut back forever. I'm not saying your life is over. It is not. We're just going to cut back temporarily until we get the cards under control. So either you go smallest to largest, or highest cost down to the lowest cost. You may say, Keisha, I can't live without my credit card. I told you things tight. Okay, what that means then is think about these side hustles. It is possible. Everything with money is possible. Money is possible. What I want you to do is understand how money works and to implement that. You have to understand how money works so you can implement it. That is my goal for you guys. So stop using a card. If you need additional income, we have to think about side hustles. We have to think about additional income streams, but we're making this happen small to large or highest cost to lowest cost. Then this is the snowball method. First one, list the debt from small to large. Make the minimum payments on all of them except for the smallest one. For the smallest one, you're going to be paying as much as you can until it's paid off. Once the smallest one is paid off, we move up and we rinse and repeat the process. We have to stop using the cards, but all the other cards, we're not letting them run amok and we're piling up balances. We're making minimum payments. So if you have 3 cards, you're going to be making the minimum payments on the other 2. And then the rest of the money, you're chunking it down on that first one, as much money as you can put in. And when that one is gone, we'll move to the next one, pay minimum balance only on the third, and we're pumping everything into the second card. And you keep going. That's the snowball. You just roll, roll, roll until they're all paid off. Other way, we'll call it the avalanche method. Avalanche, like snow avalanche coming down. What that means, start with the highest cost, list them by interest rate, make the minimum payments on everything else except for the card with the highest interest rate. Put as much as you can on that, work your way down. Pick any one of them, they both work. It is personal preference. It is whichever you decide, but they both work. They absolutely both work. No, best practice again, track them, track the debt, avoid using the cards while you're paying them down. You also are able to renegotiate if you have loans, because some people have line of credit. This is not only for credit cards. Some people have line of credit, they have payday loan. You can approach your financial institution and have a discussion with them. They are open. They are motivated as well to see you succeed financially. They are. So speak with them. Say, hey, I'm here. I want to talk to you about my specific situation. What can you do to help me with this loan I have here? What can you do to help me with my credit card? What can you do to help me with my line of credit? Help me. They're gonna discuss options with you. They will. The financial institutions are here to serve you. And I want you to understand that. A lot of people think, yeah, bank evil, don't like deal with. That is not true. What is evil is your money habit. You need to confront the habit. That's why we're changing the mindset. Shift the mindset. The banks are here to help you. They have all sorts of products to help you. So you have to go in and have a discussion with them on your behalf. You have to look out for yourself. What a lot of people think is, oh, well, the bank should call me and say, hey there, I realize you have a high balance here. What do you want to do? No, it is your money, your life. You have to take control. When you take control and you go in and have the discussion, it's going to work out. But what a lot of people do is, let me wait and hope the bank should tell me what to do. I have all my money there. They should be looking on my money and telling me what to do. No. It's your money. It's your life. You need to take control. If it's tight, we need to create additional income sources, but we're making this happen. If you're not sure what additional income, go on the website, download the guide, look through. Lots of ideas are there. All right, so we're moving along. I want you to tell me, which one are you guys choosing? How will you set up your debt repayment plan? Every day I'm becoming more financially healthy. Right? Every day I'm becoming more financially healthy. Let me know, which one are you looking to implement? Right? They say every day I'm hustling. Every day I am becoming more healthy financially. I'm fixing up myself. By the time I'm done with you guys here, and we have Sajiko in the house, so by that time, look here, you are gonna be a whole new person. Snowball, snowball, snowball. All right. Okay, we're doing some snowball methods. Perfect. Again, it's your choice, whichever one you do, but make sure you do one. And we have to stop using the card. So if we need a side hustle, we're gonna go get a side hustle. If we need to cut back for a little bit, we're gonna cut back. It has to come from your will. So I know you may think, well, you know, Keisha, it's hard. Yes, but it's possible. And all you need to know that it's possible. Once it's possible, you can do it. You have to believe in yourself. You have to take the action. All right. So my finances don't scare me because I have a plan. Right? My finances don't scare me because I have a plan. So we're going to move into now saving, because remember that 20%, it says saving and investing. You have to do both. People may say saving I can't make no money. Correct. Saving is not for wealth creation, but saving is needed for emergency fund, travel fund, health fund. Any short-term need that you have to save towards it. But it is not going to take you into wealth. So understand the difference. Yes, we're supplementing our income. The answers are all there for you. Yes, Whitney. So saving is important for short-term needs. Saving is important for short-term needs. Saving is not a wealth creation tool. You cannot save and expect to be wealthy. That's not how it works. Again, it doesn't mean that anyone misled you. You just didn't know. But now you know. So you're going to do better with your money. Saving will not create wealth. Saving is for my short-term needs. Investing is how you create wealth. But you have to do the two of them, because any and anything can happen. When we're saving, we have to know what we're saving to, the number. A lot of people just leave some money in my bank account. No, we're not doing that. Taking control. So that means we need to be smart. We need to have a specific goal. We need to measure it. We need the figure. We need to make sure we put specific actions behind it. We do a reliable and realistic plan with a timeline. So let's put that in practice. So say we're going to be saving for an emergency fund. Let's look at that first. Emergency fund should be around 3 to 6 months, because anything can happen. We can lose our job. We can have a slowdown in our business. For those who are running businesses, we can have a slowdown in clients. We have to stay ready. We need 3 to 6 months of expenses tucked away. How we're going to get there is that we need to know the expense first, right? That's why the tracking is important. I need to know my expenses. I write them down, total them for the month, multiply it by 3 or 6. That will represent the total money you need to have. And so you're going to be saving to that number. And you're going to give yourself a timeline to reach that number. So you may say, well, I need to come up with $10,000 or $100,000. Okay, if I put $10,000 a month or $1,000 a month, I will reach my emergency fund goal in X months. Right? So back here first. So let's work with the $1,000 our monthly expenses. Or I can be more realistic. Let's say 10,000. I'm just using across currencies because we have different currencies today. So 10,000 is our monthly expenses. When I multiply that by 3, I need to have 30,000 or 60,000. How you determine how much you have is the nature of your job. If your job very volatile, today you work, tomorrow you don't work, next week you work, don't work the following week, you need to have more. because your income is erratic. It moves up and down. It fluctuates a lot. You need to have 6 months. Person who, yeah, my income fairly stable, I'm good, and it really would be hard for me to lose my job. You can go with 3. Know your number. Everybody's number is personal. Work towards that, right? You may even be someone with 3 and say, you know what, Keisha, but anything, I need to stay ready. I want to go to 6. That is also fine. Whichever number you pick is a personal decision. I'm just teaching you what to do. Pick your number. And then what we're going to do is divide that number into how many months you think it's going to take to get you there. And then you're going to automate the saving. You're going to set up a standing order. You're going to set up a pre-authorized debit. You're going to set that up. Take yourself out of the equation. Create discipline using technology. That's what you're going to do. Create discipline for yourself using technology. Pick your number. It doesn't matter to me. Pick your number. Make sure you automate the consistent saving. That's what I needed to do. When you are looking, you're going to have conversations with your bank. We have our bank here. We need interest rates roughly around 1.5%. That's where interest rates are going up. So this is the beauty about saving. No, you're actually getting better returns because interest rates are going higher. And what you're looking for are these high interest savings account, high yield accounts, premium saver, money market funds. These are great products that you can think around for investing. Every company, however, has different ones. So you have to go in and talk to them. The advisor now will say, hey, this is the one I would recommend. I'm not going to recommend anyone because they're different banks, different companies. But I'm giving you the information to ask the right questions, and I'm giving you the information to have the right conversation. What I want you to be able to do is to take control of your money. So I don't want you to go in and just sit back and you say, well, I don't know what I want, just anything. I want you to be able to engage with the advisor and have a meaningful conversation that will be best for you. That's what I want. And so I'm giving you the information to be able to do that. So, saving the smart way. How will you set up your saving plan? Because with saving, once you reach the emergency fund, we stop and we're going to invest everything else. Once you reach that number, if it's 3, 4, 5, 6 months, once you reach it, we're stopping and we're going to start investing. That 20%. Come up with a saving first, knock that off. All right, saving, emergency savings, you're good. Then we're shifting. What some people do as well, which I like, is, you know what, I'm going to do 50-50. 10% go into my saving plan, 10% go into my investing. I love that because you are investing. So you're building wealth at the same time, you're taking care of your short-term needs. Beautiful. You can do that as well, right? To get creative. That's really when you say, yo, I'm taking control. I'm doing this. Can do 10% saving, 10% investing. When the saving is finished, all right, 20% going hard with my investing. Some people say, you know what, 20% not enough for me, Keisha. I'm going 30, 40%. I love that. I'm not going to stop you. Invest as much as possible. But make sure your short-term needs are covered. Again, remember, I tell you, I'm giving you the holistic system, not just the investing only, the holistic plan. Every pillar of the plan needs to come together and needs to speak to each other for it to work. They all have to come together. All right, so as I said, no, saving alone, not enough. Saving is for short-term needs. You have to do it, but you're doing it to cover your short-term needs. Then you have to invest. If you say wealth, you have to say investing. No, saving, your money is in a bank account, 3 to 6 months, but it's losing value with inflation. That is true, but it's just for short-term needs. So that is okay because it's for short-term needs. Every single cent outside of that has to be invested. Every single cent. All right, so we're going into the different types of investment. We're building up. I'm gonna drop some questions for me if you need me to answer anything. Questions. How do we include debt in our budget? Love that. To include debt in your budget, it's going to be one of the bills. That's what it's going to be. So when we're doing our spending plan, one of the line items is going to say credit card. As we're paying off the card, we'll have several items. We're going to have minimum balance, card 1, minimum balance, card 2, maximum payment for card 3. It has to be a part of the budget. Or it not way happen. If it's not in the spending plan, it won't get accounted for, and we don't want that. So it has the debt repayment has to be in the monthly spending plan. This is why the monthly spending plan is important. Has to be in there. Put the amounts and stay true to that spending plan. Would you recommend taking money for unit trust for investment like IPO? We don't touch the emergency fund because the emergency fund is for emergencies. Money has a purpose. It is a tool. We cannot touch emergency fund and invest it because, yes, IPOs have a certain track record, but I don't play with my emergency fund because any and everything can happen. If you need IPO money, side hustle comes in. Create additional income streams. But I don't want you guys to be touching the emergency fund to do an IPO. Not prudent money management. No. All right, and then I have another question. Do we put credit card? Yes, you put it as one of your spending line items. You absolutely do. All right. So different types of investment. First type, unit trust. I'm going across all the different asset classes, as they say. I'm letting you be aware of what they are so we can go through them. Unit trust. Inside unit trust are groups of stocks and bonds. Right? Think of it as a bouquet of different flowers. Each flower is a stock or a bond. We combine them and have a nice bouquet. That's what a unit trust is. That fund is managed by someone who is a professional and expert. I used to manage mutual funds, so people would give me the money, I pool it together, and then I invest it on your behalf in different stocks and bonds. However, because of my expertise, you would have to pay me a fee because I am doing it for you. So you have to pay me to do it for you because you may say, well, I don't have the time to do it for myself. I wasn't lucky enough to, go learn. Some people may even do unit trust and stocks because they may say, well, a part of my portfolio, I want a professional managing it. Good idea. You can do that. Or some people say, well, I want to do it all by myself. Also good idea, but pick what works best for you. That's why we're going to have the discussion with our advisor to say, advisor, help me to understand which do you think works best for me. You can do all unit trust, you can do all stocks, you can do a combination. You have to pick what is best for you in discussion with your advisor. But I'm giving you the information so you understand what to say to them in that meeting. I don't want you to go in and the advisor is asking you a question and you can't really answer because you don't know. Let's learn as much as we can so we can implement. Real estate is another asset class. With real estate, you can physically buy it. You can buy property, rent it, get that rental income. People do Airbnb, which is short-term rentals. Also, new development, an indirect way of investing in the real estate market is something called a real estate investment trust, a REIT. You get real estate exposure without physically buying real estate. You get good returns, but you don't have a high upfront cost as if you were going to buy the house yourself. So think about it. If you say, well, I want to invest in real estate, I don't have enough for a deposit to buy a physical property, REITs, beautiful, very, very beautiful thing. Also, you can think about companies that are tied to the real estate sector, right? To get indirect exposure, right? That's another option, but these are different ways of investing in real estate. Stocks represent ownership in a company. When you buy stocks, you become a part owner. So you can buy stocks that represent companies in Jamaica, US, globally. No, you also want to look, because inflation is high. We want to learn about what sectors do well with high inflation. This is where the learning comes in, the education. This is you educating yourself, pouring in knowledge so you can make decision. You need to know sectors that do well with rising interest rate, because interest rate going up now. I want to train you to see what's happening in the world and be able to take advantage of it and make money. That is a skill set that you can use over and over again in life forever, to see what's happening in the world and say, wait, but if inflation going up, these types of companies should do well based on my education I received. Oh, let me go do some research and make an informed decision and speak with my advisor. That's what I want to train you to do. I don't want you to just let the world pass you by and you're just existing and you are struggling. I don't want that. I want you to see opportunities everywhere. So inflation is high now. Interest rates are high now across the world. This is globally. Wherever you are from, inflation is a problem. Wherever you are from, interest rates rising, that's happening. Quality company is what we need to be looking for, but quality have different criteria. So I want to teach you that so you can learn and apply it to your life. Now, some persons here today may be saying, well, I'm about passive income, Keisha. Yeah, passive income, that's my thing. Can't bother work every day. I want passive income. Passive income is a beautiful thing. How you get passive income through the stock market is through dividends, because this is when companies pay out portions of their profit. That's a dividend. So you need to look for dividend companies. There's a way to do that. We're going to learn, how do I find dividend companies? You could even go into your advisor and say, hey, advisor, can you help me to find some high dividend companies? Right? I want you to think along those lines. We're pushing ourselves into positive money habits that are going to create wealth. We're not letting the world pass us by. I will just look, I will wonder. We're taking advantage. We're making money. We're seeing opportunities. Cryptocurrency is another new area. I have a video on this, the future of money. Please watch it. It's on YouTube. I went through the entire history of money from when money was represented in cows and cattle. Watch that video. I teach you exactly the history leading right into what will be the future of money. You have to understand where money is going if you are serious about wealth creation. Again, we can't just make the world happen and we're just sitting around. We have to take control. We have to see where is money going, because money facilitates business, money facilitates transactions, money turnover. That's how money grows. If you don't understand where money is headed, you're going to be left behind. Plain and simple. If you don't understand where money is going, you're going to be left behind. So we have to understand that as well. We'll touch a little bit on this tomorrow in terms of cryptocurrency and what it is, so you guys can get a better understanding. But watch that video on the future of money. Now, going into the meat, we're going into the meat of it all. Account opening. I'm going to take some questions before I bring up Sagicor. I see, Andre, you have a question. So instead of waiting to save up a grand total for emergency fund, can you put a standing order on your account to take out a set amount into an emergency account? Absolutely correct, Andre. That is the way, that is the blueprint of doing emergency savings. You allocate a certain amount of money each month towards this account. You set up a standing order, you set up a pre-authorized debit. It's called different things in different countries. Essentially, you want to automate the money coming out of your account and going into the emergency savings account. Absolutely, that is what you need to do. Correct, 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 correct. Any more questions? Anything so far that I've taught you that you say, well, Keisha, I wasn't clear on this. Let me take it now before we move into the discussion with Sagicor. Okay, what happens to your dividend check if you don't cash them? Like any check, they have a date in which they're applicable for. If the date passes, the check is no longer valid, and then you'd have to go and inquire about getting a new check. Cash the dividend checks when they come. The whole point of the dividend is the passive income, the return. Remember, money, we don't play with money. Once we're here on the money side together, we don't play with money. If money is there to be made or earned, we're going to get it. So when your checks come in, you have to cash them. So put that into our money system, in our planner, in our journal. Hey, dividends are quarterly for this company. Plan for it. All right, I think we're good then. So I'm going to be bringing up Sagicor. I am very excited. Very excited. Welcome, 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 Eugenia. So I think you're on mute. So everyone, let us give a big money welcome to Sagicor, and thank you so much, Sagicor, for partnering with us for the Make Money with Investing Bootcamp. I am excited to have you here because I believe that with Sagicor and Profit Jumpstart, our interests are aligned. We have clients here, wealth, money, up, up, up. And so I'm very excited that you guys are here to also push now the implementation and to bring additional knowledge and determination, encouragement, empowerment to everyone inside the bootcamp. I see some virtual hugs are coming for you. And we have some welcome, welcome. All right.
Thank you.
Right. So very nice. Eugenia, please intro yourself so everyone here knows who you are.
Sure.
And we can head into a full-on discussion. And Sagicor Investments is here. Sagicor Investments.
Thank you so much, Keisha. So I'm Eugenia Wilson. I'm the officially on paper, I'm the regional business development advisor on the western side of the island. But pretty much I am a wealth advisor because that's what I do on a daily basis. So before I jump to my presentation, Keisha, I saw one of the questions about the dividend checks. Do you mind if I just
Absolutely. Right.
I believe it was Simone, or was it a gentleman who asked a question? I lost it. Nick. So Nick asked about his dividend checks.
Right.
So perfect. So dividend checks in Jamaica have a 12-month expiration date. They're a little bit longer than the usual checks that will go stale in 6 months. So your dividend checks last 12 months. What we are encouraging persons to do, stop receiving checks. There's an option for you to sign a mandate form to have your dividends paid directly to a bank account. So, because the average person is not joining a bank line again to cash a check. So please, if whomever your broker is, or you can probably contact Jamaica Stock Exchange themselves, have the form signed, and have your dividends go to any bank account of your choice. So I hope that helps.
I think so. That was very useful. That was very useful.
All
All
right,
right.
awesome. So I see some other questions coming in, but I'll take them at the end.
Yes, we have a very
They're
spirited
very
and
good. Oh my
engaged
gosh, I love
bunch
it.
of persons. I tend to bring out the sniper in persons, the money sniper that
I love
people
it.
just say, ready. So I'm saving the questions as well, so we can take them at the end for sure.
All right, awesome. All right, so let me just go ahead and share my screen.
All right.
All right. Hold on one moment. All right, there you go. All right.
All right, I'm gonna switch it over to you, Eugenia. Take it away.
All right, awesome. Thank you so much. So, once again, I'm Eugenia Wilson. I am the Regional Business Development Advisor with Sagicor Investments. Keisha spoke a little bit about her journey. So, I guess I'm going to have you get to know me a little bit more. I'm pretty young. But my investment journey personally, I was investing from I was in school. I understood the value of money from a very early age, especially that it's with the fact that I grew up in a generation of adults who didn't understand finance, and I witnessed firsthand how the disadvantage my own parents had because they weren't educated, and maybe they didn't seek out the education either, but they were really disadvantaged about it. And that's what motivated me over the years. I said, hey, you know what? I'm going to bridge that gap. I'm going to be that servant in the financial industry to teach finance, not just sell a product to clients, but teach finance and financial education to everyone I can meet. So, which is why what Keisha said earlier, alluded to earlier, Sagicor and her business aligns perfectly because we're all about financial education and growing persons in that respect. All right, so who's Sagicor? I know a lot of persons may or may not know the name, but we've been around for a while. So Sagicor Investments is a subsidiary of the Sagicor Group Jamaica. Sagicor Group Jamaica is a majority-owned subsidiary of the Sagicor Financial Corporation, SFC. The history of Sagicor dates back to 1840. So we have been around for a minute. So SFC, Sagicor Financial Corporation, is a dynamic indigenous group which has been redefining the financial services space in the Caribbean, building a strong base from which it's expanded into the international financial services markets. So we know Sagicor now operates in 23 different countries in the Caribbean, Latin America, the United Kingdom, and the United States. So we're not just in Jamaica locally. Sagicor Group Jamaica is a full service financial institution offering a wide range of products and services. Our financial solutions are designed to meet short and long term financial needs. We have Sagicor Investments, we have Sagicor Life and Health Insurance, and we offer annuities, pensions, banking, and real estate. And Keisha did mention a few of those in her presentation earlier. So Sagicor Investments Jamaica specifically offers a plethora of investment options, such as our industry-leading stock brokerage services, Sigma Global Funds, which is a type of unit trust, global bonds, and repurchase agreements, just to name a few. So Keisha mentioned earlier about trading stocks. And when you talk about simplicity, flexibility, and choice is yours when you use our equity trading services. Stocks are an important component of an investment portfolio. We offer our investors the opportunity to purchase stocks on both the local stock exchange and the overseas stock exchange. Investing in equities and stocks, as we like to call it, or Jamaicans like to call it shares, can provide an investor with an added diversity to their portfolio. Sagicor Investments is a full service brokerage firm. We don't only just sell stocks to our clients, we have a wealth arm, capital markets arm, where we bring companies to the markets, just to name a few. So if you decide to start trading stocks with Sagicor, two common questions that we usually get is, can you view your stock portfolio online with Sagicor Investments? Absolutely. You will be able to view your stock holdings on our e-bank platform. So you don't need to necessarily come in bank to get an update. You can just literally view it at home. Can I trade my own stocks through Sagicor Investments? Yes. Opening a stock brokerage account, also referred to as a JCSD account, which is a Jamaica Centralized Securities Depository. The name might flow over your head for now, but over time you learn it. It gives you the opportunity to trade online using Jamaica Stock Exchange's JTrader portal. Sorry, JTrader portal. So let's talk about JTrader. So JTrader is powered by Jamaica Stock Exchange, which offers online trading of specific securities to customers. Customers can buy and sell their own securities via this Jamaica Stock Exchange online trading portal. And there are some specific benefits with using this. The fees are significantly less. You get your trading fees are a little bit below 0.5%. Convenience and freedom. You can execute your own trades at your own leisure from anywhere, as long as you have a computer, tablet, mobile device, and internet. You have instant updates on stock prices. With the Jamaica Stock Exchange online trading, you can stay updated with information in an instant from any marketplace, from any place. But the thing about with using the JTrader platform, you can see the buy order queue, the sell order queue that you wouldn't necessarily have access to if a broker doesn't use JTrader. Also, when you do your trades yourself, you see them live. So anything that's happening in the market within opening hours, you're able to see that, act on it, jump on it right away, and you can do your trades quickly. We don't necessarily have to call your advisor and say, hey, can you push through this trade for me? Time can be a factor when it comes to that. So you have full control. You have the ability to trade your own, manage your own stock portfolios, and control the flexibility over the types of transactions conducted. Lastly, you have account access. As an online account investor, you have access to your accounts 24/7. You can place orders 24 hours a day, 7 days a week. Mind you, the market is open within a specific window Monday to Friday, but outside of that window, you can still place your orders in a pending queue, and when the market opens the next business day, they go through ahead of everyone else. So Sagicor e-invest. I'm sure Keisha's probably going to touch on this a little bit more, but IPOs are, generally speaking, when a company comes to the stock market for the first time. I like to use the example of Fontana. Some of us who are living in Jamaica may be familiar with Fontana. Fontana was 50 years into operation before they decided to come on the stock market for the first time in 2019, and it opened the opportunity for everybody, Jamaicans, people in the diaspora, persons overseas, to put in an application to purchase into the company. And that is what we consider to be an initial public offering. The company is coming to the stock market for the very first time, which is a really big deal, and it's a really attractive way of trading stocks. So with Sagicor, you can enjoy the convenience of never missing an opportunity to invest in an IPO, initial public offering. So you can be anywhere in the world and apply for an IPO once it's on our Sagicor Invest platform. All right. So by eInvest is an online platform that facilitates electronic submission of applications for initial public offerings, additional public offerings, right issues, and other public offerings overall. All right, awesome. So that is our eInvest platform. That is about our stock brokerage services overall. So once you go through the entire course with Keisha and you decide, hey, you know, I like how stocks sound, I want to add stocks to my portfolio, I invite you guys, set an appointment with us. I'm going to put the link in the chat. Hopefully, Keisha, hope we can put the link for the form in the chat where you can set an appointment with us and decide, hey, I want to add stocks in our portfolio. As it relates to what specific companies we would recommend to each person, that requires a one-on-one consultation. We figure out where you are, where do you want to start, are there any particular industries that you like, and maybe an IPO is coming out that you want to jump on board with. Regardless, set a meeting with us, set an appointment with us, and we will decide, or we discuss rather, how would stock trading work best for you, and how best would it complement your portfolio? Because depending on where you are in life, it could be financially based on your age or whichever other circumstances, we will determine how best to allocate your funds if stocks are best for you, because stocks aren't necessarily best for everybody. All right, so our Sigma Global Funds. So Sigma Global Funds are a type of unit trust. So what is a unit trust? The unit trust is the pooled investment fund, which is managed by a team of expert fund managers. It's an excellent opportunity for investors to take advantage of investment opportunities in a wide variety of instruments, which would not normally be available to individual investors. It's also an opportunity for investors with minimal knowledge of the stock and bond market and in its general technicalities to participate in earning from the market. So there are some persons who are very, very new to investing, and there are persons who are very experienced in investing, but want to have some funds that they don't necessarily want to manage themselves. Sagicor, well, not necessarily just Sagicor, but unit trust affords them that opportunity. So we will manage your money for you. You will make money in your sleep. That is a portion of your portfolio. That's a portion of your money that we'll just take over. We'll manage it for you, and you just over time monitor the balance, how it's growing, how it's performing. And if you need some money or add some money, it's easy to do with a unit trust in comparison to a stock account. So the Sigma Unit Trust Fund has been registered in Jamaica from 1994. So we've been around with our unit trust products, and we're actually the pioneering company for unit trust in Jamaica. So within our unit trust portfolio, we have 18 different funds. And we have 18 different funds because we understand there's some persons who want to invest for the short term. We understand there's some persons who want to invest for the medium term and for the long term. Then there are some persons who are more on the conservative side. They don't necessarily want to do something too aggressive. They don't want to see the whole fluctuation. They can't bother that. They just want to put the money down somewhere safe. We have some funds for that. And then there are persons more on the aggressive side that they want that aggressive approach to their funds, and they want to see those high returns. And then, of course, we have persons that are in between. And that's the beauty about our Sigma Global Funds. We have many different funds, 18 in total, we have a fund for everyone. So currently, as of April 2022, Sagicor has over $130.9 billion under management. We own a big chunk of the unit trust market in the entire, well, I should just say country, but the Caribbean overall. But if we're talking about Jamaica specifically, we own over 40%. I would say that's the allocation that we have when it comes to unit trust right across the market. So different brokers have their own unit trust products. We call our unit trust products Sigma Global Funds. And currently we own 41.1% of the market. So we don't only have experience, but the market trusts us and they give us our money, and we have been doing exceptionally well. So the second to us is our competitor at 15.4%, which is Scotia Investments. So now I like to put my money where my mouth is, and I like to speak figures. That just trying to throw big claims out there. So we're going to talk about two funds specifically that persons tend to love. It's more on the aggressive side, but it's one of our two of our best performing funds out of the entire 18. So we have the Sigma Equity Fund and we have the Sigma Global Equity Fund. Both of these funds, as I mentioned to you earlier, unit trust funds are pooled managed fund. So when you put money in the Sigma Equity Fund, it's pooled together with everyone else who puts money in the Sigma Equity Fund. And then we have fund managers who are managing the fund for you. So with the Sigma Equity Fund, everyone that puts money into that fund, their fund is being invested on the Jamaica Stock Exchange. It's purely stocks. So it's really ideal for persons who want to probably get exposure to the stock exchange, but they don't for whatever reason, they don't necessarily want to buy their own stocks. The Sigma Equity Fund is ideal for that. The Sigma Global Equity Fund in US dollar is denominated in US dollar and is exposed to the US stock exchange. This for persons who want to invest in the US stock exchange, but they don't necessarily want to go buy their own companies, or they're not there yet to buy their own companies on the US stock exchange. You can invest into the Sigma Global Equity Fund, where you get exposure and the benefits and reap the returns from having money in the US stock exchange. So the Sigma Equity Fund in 2016, if you had invested some money, I don't know if you can remember where you were in 2016, but May 2016 to May 2021, your investment would have grown by 121.05%. Now, if you had your money in a regular bank account, I promise you wouldn't have seen that type of return. And then you have the Sigma Global Equity Fund, which is the USD side of it. It's the newest kid on the block. It's just been around for about 3 years or 4. I ran the report between the 15th of May 2020 to the 14th of May 2021, and the fund would have grown by 21.48%. And I did that deliberately for you to see the impact it still had even during COVID when the entire market was down. Our fund managers really know what they're doing. We have been doing well, which is why we are the industry's best right now, because currently we have the number one performing unit trust fund in the entire country. So we spoke about, well, Keisha spoke with you about, what best is for the right person. Different persons, depending on where they are in life, their allocation will be different. Not everything is for everyone. One size doesn't fit all when it comes to investing. One size doesn't fit all when it comes to finance overall. There are principles that we're guided by that she spoke beautifully about, but there are certain specifics that requires us to get to know you individually. So which is why you learn the information, go to presentations like this, go to trainings like this, get a general idea of what options are out there for you. Then you have a consultation with the experts to say, all right, this is where I am. Be very transparent with your advisor, so then we can then recommend what the right allocation or the right steps for you. I will say allocation, we're talking about the different assets, the different type of products. Like I mentioned, stocks aren't for everyone. Even though I try to recommend it to everybody, but stocks aren't for everyone. Unit trust might not be for everyone. Or it can just be a balance with the other asset classes, because unit trust and stocks are only two different type of investments. There's two type of investments that you can invest in. There are many others, but just for this discussion, we're just going to focus on the stocks and unit trust. So talking about diversification, don't put all your eggs in one basket. We never ever recommend that. You have to have a balance. She spoke about the different rule with the 30. I don't remember the exact percentage, but how you can allocate your funds throughout your in your budget. It's very important that you have diversification. So, for example, if somebody's in their 20s, we would recommend to them, hey, have 80% of your investment portfolio in equities. You're young enough. You tend to persons who are younger tend to be more aggressive because they have more time versus somebody that is approaching retirement in their 70s. We wouldn't necessarily give them that much or any at all when it comes to equities and stocks. That's if they want it, of course, because they're reaching a legacy point in their life where income flow is very important for them. Passive income is very important for them in retirement, and they're positioning their wealth to pass over to the next generation. But as I said, it's not a one size fit all. We have this guide as a guide, and it's your allocation for your portfolio differs from person to person. So even though you'll have a colleague that you say, yeah man, I do this. Come in, talk to you, Jenny, and tell us at this one. When you come in and speak with me or any advisor, we're still going to talk to that person, get to understand their situation, which is why, guys, it's important to be transparent and honest about where you are currently so that then we can recommend and build something with you. All right. So the earlier you start, the more time your investment has to grow. Time is a crucial part of investing and finance overall. So, when it comes to the Sigma Global Funds, as I mentioned, our professional fund managers select the best investments, including each portfolio, with the aim of outperforming the established benchmarks. And then unit holders have full access to their funds at any time, and they benefit from diversification within and across different asset class to manage risk. And that's an important part of having diversification in your portfolio, whether it be having some stocks, having some real estate, having some unit trusts. That's you managing your risk and also giving a chance to earn from different type of assets. So you might be wondering, how do I get started with unit trusts? I bet you won't be able to guess. I can't see the chat right now, but the minimum to start with any one of our funds, any one of our 18 funds, is either 500 Jamaican dollars or 50 US dollars if you do some of our US funds, because we have funds both in Jamaican dollar and both in US dollars as well.
Hi, I'm Ali Smith and I'm a set for I'm very happy to be a study for wealth, my financial freedom and opportunity is me. I'm currently pursuing a bachelor's degree in finance, and I would like to set a foundation of stability in the future, prepare for a rainy day, even though you might not see such pandemic, and also just to be alive.
All right, so you heard it there. So how do I get started? How do I get a foot in with Sagicor investments? So before we even specify with Sagicor investments, we're going to talk about KYC. So when a financial institution refers to KYC, it refers to know your customers. But with Sagicor, we don't call you customers, we call you clients. So you might hear me use customers and clients, interchangeably. So KYC refers to the regulatory requirement for financial institutions to know more than just the name of their customers. And this is, back in the day, you could just probably just walk into a credit union, walk into like a VMBS and just come with a name, your date of birth, and if you have an idea, have it and just open an account. That has caused serious data breaches over the years, and they realized that they needed to tighten up. Because one person's account is mixed up and come in and take out somebody else's money. It was a lot. So these are regulatory requirements. It's not just Sagicor. Any other brokers get up and say, all right, we need this much information from you. It's regulated. It's something that is required of us legally to get this information. So financial institutions need to know more, not just your name. And as a body, we have the responsibility to develop a completed profile of our clients. And this involves getting a government ID. So if you walk into a bank or an investment broker, we're going to need a current government ID. So for those Jamaicans that are on this chat who have the expired national ID, electoral ID from last year, we can't use it. We need a current government ID. So for Jamaicans, your driver's license, your passport, and your current electoral ID. For those of us who are on the call who are overseas, we'll need your government issued ID, for example, like your driver's license and your passport for your country to open an account. Now, if you're a stock client, we will also need your TRN. So for Jamaicans, your driver's license suffices for both. But for persons who are overseas, if you wish to trade stocks in Jamaica, you would need to apply for your TRN. If you don't have a TRN, you can actually apply for it online with the tax office. They have the website that you can TAJ website, can apply for your TRN from overseas and get your TRN sent to you via email. It's actually pretty easy. Well, easy is relative. So once we're able to identify who you are, and if you're doing stocks, we know we have to get a TRN. If you're a Jamaican, we need to get a TRN regardless of what you're doing. We're going to need to verify where you live. And no, we're not necessarily going to just pop up for pop-up sake, but it's important for us to know your exact address or where your current address is. But for whatever reason, there's some instances where we need to get in contact with clients urgently. And if your number has changed, your email address not working, there are situations where we may have to mail a letter to the address and say, hey, we're trying to get in contact with you. Please reach out to us. It's very crucial. We need to have a current address. So the way that we verify your address is through your utility bills. If you're in Jamaica, we sometimes do site visits because we don't just work in office. We do visit our clients sometimes they want to. Bank statements, you can generate that online these days. You don't necessarily have to go to the bank to get a bank statement. Just go on your online banking, generate a bank statement. Once we can see your name, the bank, and your address, we'll accept it as address verification. And that applies to both locals and persons overseas. And for the persons, Jamaicans, we can use your electoral ID. So if the address at the back of your electoral ID is your current address or your permanent address, we'll use that as well. So 2 references. So we're not asking for a letter. All we want is your name, address, and number only. This may differ with institutions. Some institutions may request a letter, but for us, we are just good with just a name, address, and number of this person. So the addresses, the type of references that we usually ask for is like, for example, your employer. Once you've been employed with that person, it can be your supervisor, the HR manager, or somebody in HR who can attest to your employment with the company. More than 3 months, we can use your employer. Justice of the peace or a notary public for persons overseas. Existing Sagicor employee, so you know someone who works with Sagicor, any member of the group, you can use them. Once they're still working there, though, and they're confirmed. Someone who has an account with Sagicor. Once they have an account with Sagicor that is current and in good standing for more than 2 years, we can use them as a reference. An attorney, marriage officer. For Jamaicans, we tend to just use pastors. For Sagicor, we want a pastor who has a marriage license. Medical doctor, an owner for a pharmacy, a bank manager, or a school principal for a school registered with the Ministry of Education, and just to name a few. There are some other type of references that we can use, but those are the major ones. Those are the most commonly used one that you can use. So we need 2 references. Name, address, and number only. And yes, we will be contacting them at some point in time to verify that we know you. And no, we can't use an obvious family member. I use the word obvious. So proof of income. So that's another regulatory requirement, and it's coming from the Anti-Money Laundering Act. We want to ensure that the money that you're going to use to finance the account is coming from a legitimate source, and we know where this is coming from. So we're going to use like your pay slips, a job letter, and if you're self-employed, we use bank statements or your audited financials if you're a registered company like a LLC. And that is, in a nutshell, what we'll need to get you started. Does Sagicor allow you to open an account online? Currently, no. We're working on it. If it's a bank account, you can, but you can apply online. But for an investment account, you can't apply online. But we do facilitate clients who are living overseas. Specifically, once we have the one-on-one discussion with you, we'll work around it. I do have clients who have open portfolios who are living overseas. And if you're in Jamaica in a different parish, don't worry, we'll work with you. We'll figure it out. Just that at some point in time, you're gonna have to send the original documents to us. But we're by no means necessarily forcing you to come in office to meet with us. We have our creative ways to work with you, but we don't facilitate opening an account online just yet for our investment accounts. All right, so I'm at the stage where I'm going to open the floor for questions.
All right, that was amazing. I was here listening and saying, woo, and saving a lot of the slides as well because the content is extremely valuable. Lots of nuggets. I especially like that asset allocation slide where you broke out the different allocations by age. That is a gold mine. All we need to do, type back your age and go with that information.
And we
Right?
do have the brochure that for that, where you can share with your team. Would have the
Yes,
different
so
applications
share
in
with
there.
me. I'll send it out. Guys, also inside the course portal, Eugenia's contact form is inside there. There's a nice labeled section, how to reach Sagicor Investments, Eugenia Wilson. You just click, the link is there, fill out the form. It's also in the chat several times. So you're able to reach Eugenia pretty quickly and efficiently. Also, if you forget, the video will always be there. You can go back or you go inside the portal. The link is directly there to reach Eugenia Wilson from Sagicor Investments. That's what it says. You can't miss it. It's right there. All right. So let's take some of the questions, Eugenia. I'll go in order when they were asked. So the first come,
Okay.
first serve. All right. So are you planning to do a live meetup for Money Team? We will at some point. Sorry. We will at some point, Andre. We will. We absolutely will. We have a meetup in real life. Yes. All right. So how would you allocate your investment so you have a diverse portfolio, percentage wise? And this is really good, Nisi, because this is a question for Eugenia. As an educator, answer that. Go
Are
ahead.
you sure? That's a very good question. I think it actually was touched on a little bit on the page where I had the different asset classes and allocation depending on your age. So it varies from person to person, and I can't necessarily specifically answer that question for each person, but it depends on where you are in life. For example, if you're in your 20s or in your early 30s, your allocation for equities would be a little bit more. So, for example, somebody in their 20s would say, hey, 80% of your portfolio stocks. And if you get the aggressiveness in, get your money, get your returns higher, because with stocks or with investments in general, the higher the risk, the higher the return. The lower the risk, the lower the return. You can't get low risk with high returns. And if you're young, we really encourage you, we don't force you, we do encourage you to have most of your allocation in more aggressive investments such as stocks. Right. So, for example, somebody in their 20s would say about 80%. It doesn't have to be 80%, but it's a guide. And if for somebody in their 40s or probably just a 40s, for example, it's going to be a little bit less in terms of your equities exposure. But nevertheless, just as how I would say to you that somebody in retirement, we won't necessarily recommend stocks to them. There are persons in retirement who want them stocks. Them want jump on IPOs, them want jump and turn them money, whether because they understand the market enough or whether because they just have the money can spend. So it depends, it varies from person to person. But what I would say though, the younger you are, please jump into stocks as much as possible. Or equities generally.
Exactly, exactly. And so as Simone is saying, this was very helpful. Thank you.
Thank you.
Tammy, schedule a meeting with you already.
Right.
We have some serious
I
money
love it.
savers inside my community. We don't play when it comes to money. We're focused on growth. All right. Another person schedule an appointment. So they are coming in. Let me go through some more questions here. Can the unit trust be a joint account?
Absolutely. Whether stocks or unit trust can be joint. I will note though, this is a thing for Jamaica's stock exchange generally right across the board. When you open a stock account, I know you asked about unit trust, but I'm just going to touch on stocks. Once you open a JCSD account, you can't add anybody to it afterwards. So if you currently have a hefty portfolio somewhere about the place with and just you alone on it, have a will. You can't add anybody to your stock portfolio afterwards, which is why we encourage persons either have a will or add the person from the get-go. It's just a thing with Jamaica Stock Exchange. Hopefully they probably can change it later on, but as it is, you can't add anybody afterwards. But whether or not you have people on your account, we recommend a will. Estate management is extremely important. For unit trust, you can add them anytime. You can add somebody to the account after it's open. You can add them from the get go. Absolutely, and we encourage it. But if you don't trust nobody, please have a will.
A will is critical. A will is critical. You guys know I write a lot. Those are my news. I talk about will all the time, right? Generational wealth only happens with a will,
Mm-hmm.
right? We're not gonna spend all our time building up this wealth and then we don't ensure that we can pass it on. So
Mm-hmm.
another question from Tenny. If so, do both persons need to submit the request for a joint account?
That's a very good question. Thank you for asking that. Yes, every single joint holder will have to create their own. We have to create a profile for them. So it's not like our insurance plan, or back in the days we can just have beneficiaries for investments. The person will be a joint holder. They will have access to the portfolio, and they will be able to come in and open their own portfolio later on. So yes, they will have to bring in the same amount of the same information, and have to create the same profile for them, with the exception of a minor. If it's a minor, specifically your child, you just bring in the documents for them. They won't necessarily have to go through, of course, the proof of income, proof of address stuff, type of stuff. But for adults, yes. And they need to sign. And the adult will have access to your portfolio. That be heavily stressed that.
All right. And then we have Tammy B. Can you give a little info on the universal investor and the guarantee investor?
Sure, but I'm gonna have to defer that question. So the universal investor and the guarantee investor is an insurance product actually. So that product falls under Sagicor Life, and it's a product. And please don't misquote me. It's a product that is attached to an insurance product. So it's a type of insurance that has investments on it. So I don't know much details about it, but please, I invite you to send me an email or fill out one of the forms and just make a note so that I can have someone from the Sagicor Live team give you the details on those two specific products. They're not under Sagicor investment specifically.
So I think for that person, they definitely need to fill out the form and make
Please.
sure that they have reached out to you to get
But it's
further.
a good product though. I can tell you that much.
But it's the beauty of having you guys here because we form the right connection. The money system is
Yes.
not just
Yes.
investments. We
Just
have
give me just fill out the form
insurance.
and put you in contact with the right person.
Yes. So perfect. I love that. All right. More questions coming in for you. Tammy saying she was late. She's gonna watch again. Of course you will, Tammy. You'll watch it several times. She needs info on the CI mutual funds that you provided, and she wants to learn more about that.
Sure. So the CI mutual funds, I'm going to guess that you took that off the website. So we no longer offer CI mutual funds with Sagicor. And what really and truly what we're pushing right now is the Sigma Global funds. And just to reiterate what the Sigma Global funds are, I don't know if you missed that part. The Sigma Global funds are pooled managed funds. In layman terms, you invest the money into the fund and we manage the money for you. You make money while you sleep. And of course, your fluctuations is investments. If you live overseas, you may be more familiar with mutual funds than unit trusts. They're by definition they're different, but technically they're about the same thing in terms of it being a pooled managed fund. So we don't have CI mutual funds anymore. What we really push right now is our Sigma Global funds. That is flexible, is accessible, and it's for everybody. I have no reason for not investing or not to do investing because it starts at 500 Jamaican dollars or 50 US dollars. I have no reason to say you can't afford it.
All right, they're rolling in the question. Next question. Minimum age for minors, and she wants to add the minor to the unit trust account. So that's Natty. So we're thinking about, well, for children,
Love
because
it.
kids also need accounts, not because they're
Yes.
young. You have to start early. Eugenia said it. Start early. More time to make money work for you, more compounding, beautiful things. Start early. With my son, literally, day born, accounts open because we could get a date for the account. The only reason we didn't do it before, we didn't have a date of birth. But once we got that, the accounts were open. And I want to encourage everyone to do the same. So
Absolutely.
we can talk about the minimum age.
All right. So The day they are born, literally. But I'm going to put a clause on that. Once we have a birth certificate, once they get the birth certificate for the child, you can start. We need a birth certificate as well as a passport size picture notarized or stamped by a JP, or a passport. Because some persons have, they're on top of their game and get the passport from early. If you have the passport, birth certificate, we can open the account. No matter them age, open the account. Um, if they don't have a passport, as I mentioned, get the passport size picture, have a JP or notary public notarize the back of the picture. Jamaica still using JP for everything. We're gonna change that yet. So we're gonna use the JP to stamp the back of the picture to verify that's the child, and you can open an account for them. If it's not your child, like it could be your niece, it could be your goddaughter, your godson, just get a letter or an email. I prefer a letter by the parent signing that, hey, yes, we authorize this person to open an account for our child. They can go right ahead. As the second part of your question, you were asking about adding to the unit trust. For minors, you can actually do an in-trust for. So that's a really good strategy where they won't necessarily be joint holders on the unit trust. This is going to be in place that if anything happens to you or, the money will be in trust for that child until they become age 18. If you want to open a stock account for your child or have your child on your stock account rather, you need to request a TRN from the tax office. And you can get a TRN from the day they're born. A lot of parents don't know that you can actually get a TRN for your child from early. So I recommend get those things out of the way, especially if you definitely want to have your child on your investment portfolio. Get a TRN. I hope that helps.
There, you heard it. You heard it. You heard it. All right. Does Sagicor do estate management?
We do. We do have a property services arm of our company. So yes, you can fill out that form. Let me know that's what you're interested in. I will have you liaison with somebody from the property services part who does real estate as well. Of
I
our
think
company.
estate as in the event of your untimely passing.
Oh, estate. Oh, sorry.
So real estate. I think in the event of your passing, your estate, because we're all building wealth, we will have an estate. So Simone,
My
will have to
apologies.
go from early.
My apologies. So yes, we do assist with estate management. We for that part of it, we still do recommend get an attorney on board, but we do assist with estate management for sure. Absolutely.
Yeah, they're coming in. They're coming in. I'm feeding them out here. All right. How do I know what the types of stocks or bonds are in the unit trust? Where can they say the components, the ingredients inside the unit trust? Very good, Kirill. Very good. Know the investment.
Yes, I love it. I love it. So we are legally required to be very transparent about what is in every single one of our unit trust funds. There's a circular that is on our website. Otherwise, I can email it to you directly. So we have to update it every year, where it gives a breakdown of what is in each of the individual funds. So I can have that sent to you, but it's also on our website as well. It's called the Unit Trust Circular.
All right. Next one. Thanks for answering all my questions. Going forward, I want to learn about investing more in the US, which I wanted to touch on as well because I believe in the power of diversification. You mentioned the different currencies that are available. What's your personal take on investing globally? Let's hear the experienced words of the advisor. Talk the queens. Tell them.
I'm going to talk to you. And I'm also very frank, right? Let me touch on investing in a foreign currency versus Jamaican currency. Like, for example, the USD. I know you spoke about investing globally, but I just want to touch on investing in USD versus Jamaican dollar. And it's something that I share with my clients. The US currency is stronger. It's just what it is. And nothing is wrong if you save or invest in the US dollar. I'm not necessarily saying that you have to go to the bank to buy the US card. The banks don't necessarily give the best rates. But let's just say somebody who works as a jewelry tour operator, or they work as a butler in a hotel. They usually use their US tips to compensate their salary. And then go down to Mr. Chin, that's a regular haberdashery, and change those for little or nothing. You can get your US from those persons. And I'm saying that to say, when you save in a foreign currency, especially in Jamaica where a dollar is declining rapidly, you are maintaining and preserving the purchasing power of your money. So while you might not see, you might see a Jamaican investment saying 20%, for example, or 50% if you're doing stocks, and the US investment might say 10, but in the day, your US currencies, if you're just saving conservatively or you're saving in a bank account, your US currency, your US savings will always hold its value. Now, on that note, well, hold its value for now. Anything can change. What do I think about investing globally? Absolutely. If you have the access to do it, if you have the capital to be able to do that, and you're working with Keisha to build up your capital so you can afford to do different type of investments. And of course, it starts with the budgeting, as you mentioned. It starts with how you're managing your finances. You can get there. Never ever think you can't get there. But once you're going to touch into investing in the global markets, you have to go find a little bit more money up front to do so. But as I said, no matter where you are now, you can get there, follow the principles he's teaching you. You can get there and invest globally. When you step into the global space, there are different rules and different dynamics that you're going to have to encounter and take into consideration. So, for example, with what's the war that is happening in Ukraine, I'm going deep right now, I'm sorry. The war that's happening in Ukraine and Russia, of course, that's going to affect the global market a little bit sooner, or it's affecting the global market sooner than how it affects Jamaica. So once you touch into the global market, you're going to have to do a little bit more research, a little bit more due diligence. But it's good to expose yourself to opportunities beyond the country that you're currently residing in. And that is also a part of diversification. So I encourage it. Absolutely.
You heard it. You heard it there. You heard it. So it's not just me saying it because, Keisha love talk. And she said, it is the truth. It is the way. It is the blueprint. Diversification is important. All right, we have some more coming in. Eugenia, you're stirring up the question.
That's my job today.
So Simone is asking along the minor route again, what is required for a child that's born outside of Jamaica if not the TRN? So for, I guess, not for international children she wants to open their account for someone outside of Jamaica that's a child. How is that possible?
So she asked about the TRN specifically. So the TRN is only mainly important for the child or for anyone if they're doing stocks. No, let me rephrase that answer. For international persons who want to invest locally, the only time the TRN is a requirement is if they want to trade stocks, as in not unit trust, stocks. Any other type of investment, they don't need your TRN. We'll just take your social security number, your SIN, whatever tax ID your country uses, will take it. But once you want to trade stocks as an international person, we then ask for the TRN. But let's just say you're a Jamaican and from the diaspora, you live in Canada, like Keisha, and you decide to take a trip down. Just walk with a child's birth certificate or their passport, or you as an adult walk with your passport. Go to the tax office. You can actually get a TRN if later on you decide to do so. And if you still want TRN and you're not visiting, you can go on the TAJ, Tax Administration Jamaica website, and there are information there on how you can actually request a TRN online. I hope that answered the question. I think that's what you're asking, I think.
Yeah, that was good. That was good. And then next one, investing in USD, does that provide a buffer to inflation? So you can share your views and then I'll go on it. I love this question.
I love it.
So proud of you guys and all the learning. Look at you. All right, go ahead, Eugenia.
I love it. So I touched on that a little bit in my last question about the US currency. I did see this question coming. So yes, inflation is a complex term. So I think currently in Jamaica, for example, the inflation rate is about 6% now. It usually bounces between 4 to 6%. It's probably more than that now. I don't remember the last
11,
one.
11.
It's at 11. Before COVID, it was at 6.
Yeah.
So For those who aren't familiar with what inflation is, inflation tears down the purchasing power of your money. And an important part of that is, taking into consideration the value of the country's dollar. Um, so in terms of acting as a buffer towards for inflation, partly yes. It definitely is an important part, is an effective way to act as a buffer for inflation. And I do encourage it if you can. So for example, there will be persons who say, hey, I want to save $50,000 a month, and 25,000 out of 50 they want for long term. They don't want to touch the money right now. I said, why not convert it to US? Because $100,000 today, Jamaican, cannot buy the same amount of items in the next 2 years with that same 100,000, but probably the US dollar can. Because the US dollar, from based on history and based on how it's performing, I mean, it can change. Nothing is written in stone. But for all intents and purposes, we don't see that changing anytime soon, where the Jamaican dollar values more than the US dollar. The US dollar would more than likely have a greater value, or at least maintain its value in the next 10 years. So to answer your question, yes, it's a very good strategy, and I do encourage it if you can to save or invest a portion of your long term in a foreign currency, specifically the US currency.
Right. And so, but remember also, guys, the aim with investing, you have to beat inflation. Investing is what gives you those types of return that can really give you a fighting chance to beat inflation. It won't happen with a savings account, so we'll have to shift over into investing. All right, we have some more question. Is there an advantage to trading with a US broker versus a Jamaican broker? I love this question because it's a common misconception. So take it away, please. Share your views. So I think what Fiona is trying to get is, if I'm doing my US investments with a US broker versus doing my US investments with a Jamaican broker, is there any advantage in one over the other?
Why not do both? Because the thing is, a lot of persons overseas are coming to Jamaica to do investing. And if you're talking about broker, if you're talking about specifically a stock brokerage account, Jamaica has the number one performing. I think probably last year they didn't get it, but for like 8 years straight, we had the number one performing stock exchange in the entire world in terms of profitability. So if you can do both, why not do both? That's just what it is. The wealthiest clients never really invest in one broker in one country. So in terms of an advantage of one over the other, I wouldn't necessarily say they have an advantage over each other. I would say if you can do both, do both. It's always good to start in your home country. That's easiest access to you. So if in the US, of course, you're going to take advantage of the US, the brokerage services in that country. But it's good to explore outside of your borders. That's my politically correct answer.
Yes, you can do one, you can do two, you can do both. It is true that what you're looking for at the end of the day is the exposure. It doesn't matter which broker you use. It's what I look for is the platform. I look for the customer service. I look for ease of access. You have Eugenia here who can answer the question. I love that. I can get you one-on-one to ask my question. But overall, you're seeking the exposure. If Sagicor provides US dollar exposure, Sagicor Investments provide US dollar exposure, which Eugenia said, yes, 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 US dollar exposure over here, go and get the US exposure. But it doesn't stop you from saying, hey, I'm going to also get US exposure directly in the US market and open a trading account there as well, which I'll show you to do tomorrow. But do both. You want the exposure and you want as much of it because you want to grow your money. So Eugenia is here. Sagicor Investments is here saying, hey, we have these products. We are a top performer. We've been around the longest. Look at our track record. I have 1, 2, 3, 4. You said what? 17 funds?
18.
18. No brainer. Go and open their account. Get the exposure. It doesn't preclude you from doing other things. But what I want to push everyone into, they call it what? Beast mode. Anything we see, we just go after it. Once there's money to be made, we're going after it. That's what this community All right, so more questions are coming in. Let's go with this one. The real estate. Is real estate management only for commercial properties?
No, not only commercial properties. We also do residential properties as well. So it's not limited to commercial properties. You will find more commercial properties requesting the service though. But this no, yeah, we can also do for residential properties as well. I think you're mute. I don't know if it's just for me.
Yeah, sorry. So Nisi is asking, should she have her emergency fund in US dollars?
Not necessarily. Because the emergency fund you may request from your emergency fund in the short term. You might have some money in the emergency fund and need it by next month. And we don't necessarily want it to be, for example, if you earn Jamaican dollar and you be buying US to as a part of your savings, for example. If you buy the US this month, I don't necessarily want you to pull it out in the next 2 months and convert it back to Jamaican dollar for an emergency. So an emergency fund is if it's it doesn't necessarily have to be in US dollar. Your emergency fund you're gonna need it at any time. Anytime. And it shouldn't be a case where you're gonna be if you convert it back to Jamaican dollar or convert it back to the currency you're gonna need it, it's gonna be at a loss. The where US, if you're going to buy US, for example, to be a part of your portfolio is most effective for medium to long term. Because if you buy today, convert it back to next month, you might convert it at a loss. So the emergency fund, I wouldn't necessarily recommend it to be in US dollar. The portion of your portfolio that is medium to long term that you say, well, touch right now, probably gonna need it put it as a deposit on a house in the next 3-4 years, or when you're gonna change your car, or you decide to go back to school sometime, the tuitions right now in US dollar. Yeah, man. Put that portion of your investments or US or savings in US dollar. But emergency funds, you can use it anytime. Anything can happen at any time. And you want to be able to have access to it quick. So whatever your currency is that you spend, for example, if you're in Jamaica, you earn Jamaican dollars, you spend Jamaican dollars, have your emergency fund, your short-term emergency fund in that currency.
Excellent point. The emergency, remember, tool, money is a tool. If I'm going to be using this money for a Jamaican or a US or a Canadian emergency, stay in that currency. We don't want to mix what we're doing. The emergency fund is for emergency. We can't say, hey, let me dip in it to do an IPO, let me dip in it to do an investment. No, emergency, emergency, emergency. If you want a travel fund, the travel fund is for your traveling. Same concept as the emergency fund, I use it for that. Investing money is for investments. 50, 30, 20. It is a blueprint, it is a framework applied to your life. We don't dip into emergency and invest it, then say, wait, something happened. Match the currency of the fund, the emergency fund, to the currency of the expense. That's the simplest way to look at it.
It is.
All right. And then we have one more. Which investment gives you 7% or more in returns annually in US dollars? Bond, stocks, unit trusts. So I'll let you answer and then I'm going to educate after.
Sure. I deliberately didn't go into bonds and stuff earlier, but it seems as if you do know about bonds. Bonds are a really easy way to get that type of return for US dollar because we have global bonds that pay out persons at 9%, 7%, 6%. But not everybody has a minimum requirement for bonds. Bonds are more on the higher net worth side. Their unit trust products or Sigma Global Equity did perform up to 11% at one point, but that fluctuates. Bonds are considered to be more fixed rate investments. You get a guaranteed amount for the life of the bond. Unit trusts do fluctuate, but their unit trust products that are exposed to US equities that can go up that high. Stocks are an aggressive type of investment. If you invest in stocks on the US market, you can definitely invest. You can earn 7% quite easily too. Again, they fluctuate. So if you're referring to 7% fixed, where no matter what happens, that is what you're getting per annum, I would say bonds. Have bonds out of the list that you gave me. we say etc. But bonds is an example of a fixed rate investment. So no matter what, every year your annual return is either 7%, 8%, 5%, no matter what. Unit trust, Sigma Global funds, and stocks, they fluctuate. But you can definitely earn that easily.
I like the easily part because it is possible. And I'm glad you're here saying, look here, it's easy. I say it all the time. So I love having reinforcement, which is good. So we're just up about what, 2 hours? These are engaged persons.
I love
Engaged.
it. I appreciate it.
It has been a good day one. I think it has been amazing. Lots of learning. I'm sure the money books have been written in and highlighted and star and everything. We're back tomorrow. The link for tomorrow is different from today. It's a different link. We're back tomorrow for day 2. We're going now into the investing. Really, really detailed. We're going to touch first on if you need to open an international account online for US trading, how do you do that? We're gonna do that first thing in the morning, get that out. First in the session. And then we're going through again. We have Sagicor Investments back with us tomorrow again to take more Q&A. Yes, it's 2 good hours of educating. It's like
Because
this is education at its finest, financial education at its finest. Absolutely love it. You guys are also very engaged. Make sure you know you can watch the replay as many times as you want. The link is there. You have all the resources in the portal. Eugenia's information is inside the portal, clearly labeled. Reach out to her, reach out to Sagicor Investments to ensure that we implement what you are learning. So I'm going to see you guys back tomorrow. Remember, the day 2 link is inside the portal. Make sure you get that same time, same place tomorrow for day 2. So, all right, well, one last question for you. Last question. Camille is saying, which was the higher management fees? I just want to make sure we answer everyone.
no problem. I don't mind. I'm enjoying this, to be honest. I didn't realize it was 2 hours.
We could go on for hours. So it's not to be said, I would sit here for another 2 hours.
And I should add though, Keisha, I've done presentations on a regular basis, like probably once a month I do 3 or 4. And it's never really disengaging. I'm telling you, you're doing an incredible job.
My community is snipers. We
Like-
go mode when it comes to money.
I love it. So, Camille. So our unit trust funds, we don't charge management fees for it. For stocks have fees associated with each trade. There are fees to the broker, there are fees to Jamaica Stock Exchange, JCSD. There's the tax part, there's a tax portion of it, and I think there are about 4 fees in total. But let me just give an idea of the percentage, which is why I was giving a difference between trading on JTrader versus having, for example, the broker, me, submit my orders for you through our stock brokerage team internally. So if you do it through us, the broker, whether it be JMMB, NCB Cap Market, you do it through the broker. As in, send an email, come in and sign a form. The total fees usually range anywhere between 1 to 2% of the transaction for stocks, whether you're buying or selling. Now, when you do it through JTrader, you eliminate a lot of those fees. For example, the broker fees are significantly less, and you still pay the tax. When you do it through JTrader, it's anywhere between 0.5 to 0.75% of the transaction. So it's a big difference between that and 2%, which is why we encourage you heavily to use JTrader as much as possible. But as I mentioned, for unit trusts, we don't charge management fees. All of your returns are net. And the different asset classes have their own different type of fees, but management fees for those 2 products, that's the case.
Very nice, very nice. All right, so someone was saying I would sit here for another 2 hours. Yes, Natty. How soon will the replay be ready? It's right away. As soon as we end, it will be right there. So you can watch it immediately after. Everyone has been loving it, absolutely loving. And it has been a good day one. I think lots of learning, lots of knowledge imparted. I'm excited for day 2. All right. So see you guys back here tomorrow. Different link, but same time, same Profit Jumpstarter, Sagicor Investments. All right. See you guys tomorrow. Tomorrow is only a day away. All right. Take care, everyone. Bye.